in this video, I'm going to go ahead and break down the differences between a line chart and a candlestick chart when it comes down to parsing through the price action for a particular stock. But with that said, I also want to provide a friendly reminder that in reality, technical analysis, looking over the charts, is really just one data point. And when it comes to trading or investing, you want to look at several different data points. You don't want to only be limited to looking at technical analysis, as it's not really the strongest data point out there. You want to use it in confluence with other data points, but for the purposes of this video, we also have to understand that it is still one data point, and we want to understand the differences between different chart styles. So with that said, let's go ahead and get into it. Alrighty, so we are officially in my laptop and we're taking a look at ticker symbol RIVN, which is Rivian Automotive, and we're looking at it right now through the lens of using a line chart. Now, line charts have been used for hundreds of years, but for different forms, right? It wasn't until the late 19th and early 20th century where pioneers like Charles Dow started to incorporate line charts and statistical graphing techniques to study the market prices. Right now, Charles Dow, you probably heard of that name if you ever heard of the Dow Jones, right? Because he was one of the co-founders of the Dow Jones. Or if you ever heard of the media and news organization, the Wall Street Journal, right? Well, that was co-created by Charles Dow and Edward Jones, which if you ever heard of Edward Jones, that's another famous name because that is a big financial brokerage company, right, that offers advisory services, etc., right? So these are definitely historical names and leaders in the technical analysis space. And so, in this video, I want to go ahead and kind of break down why Charles Dow really liked looking at line charts and really just explain where they really serve the best utility in using them for charting, and also just talk about a couple of other things when it comes to using candlesticks. Right now, Charles Dow really preferred looking at these line charts because they provide a clear, uncluttered view of the overall market trends by only focusing on closing prices. So by only seeing the closing prices, you could kind of ignore the noise of intraday price fluctuations. So, one of the characteristics of these line charts is that it only shows the closing prices. If you're looking at a daily time frame, you're only seeing the closing price of the day. If you go to a 5-minute time frame, you're only seeing the closing price of every 5 minutes, as opposed to when you're looking at a candlestick chart, well, there's much more data into each and every 5 minutes. And if you go to a daily time frame, well, again, there's much more data when you're looking at these candlesticks charts. Right now, I want to go ahead and kind of just show you guys the anatomy of a candlestick real quick and kind of just break this down for you. So over here we have two candlesticks, a bullish candle and a bearish candle. The bullish candle is identified as green, the bearish candle is identified as red. Now, the bullish candle, it opens at the bottom and it closes at the top, right? So it opens and then closes higher, and that's what makes it a bullish candle. And of course, you have these lines over here. They're called shadows or wicks, right? And that just shows the high of the actual price action during the time frame, and also the low. And then vice versa, when you look at the bear candlestick, right, you're gonna see that it actually opens up here and closes lower because of course it's going downwards. And again, you're still gonna have the shadows or the wicks, whatever you want to call them, right over here. So that's really the anatomy of a candlestick. And so they have a lot more data on them. But going back into the line chart and talking about Charles Dow, another reason why he incorporated line charts and when he did his charting was simply because he found that it was easier to identify the broader market trends. So he had created something called the Dow theory, which is a fundamental concept in technical analysis, and it's basically just explaining that the market is considered to be in an upward trend if it's making higher highs and higher lows, and it's considered to be in a downtrend if it's making lower lows and lower highs, right? So it's very simple to understand, but having a line chart made it easier to identify these trends. And then of course, according to Dow, the closing price is the most important in determining market sentiment, because in his eyes, he saw the closing price is where the market has settled after all buying and selling activity for the day, right? It's the price in which both buyers and sellers were comfortable with, and thus is a true representation of market value. So he only looked at line charts, right? Or that was primarily what he looked at. Versus, if you, again, switch it over to a candlestick chart, well, it's much more complicated. It is not as simple. Now, when should you use which? Now, at the end of the day, it's always going to be determined into whichever you see value in. But from my experience, I think if you're going to invest long term, it's much more easier to just look at a line chart. You're not considering all the extra data because in the intraday time prices, because you're not concerned with that. You're investing long term. And so if you're investing long term, you should be completely fine with a line chart. And obviously, if you're investing long term, you shouldn't only just look at technical analysis. As I mentioned in the beginning of the video, you want to look at other data points such as fundamental analysis, right? What the company is actually doing. And of course, you want to pay attention to the economic conditions. You want to pay attention to monetary policy, fiscal policy, etc., right? There's so many other data points that you want to pay attention to, regardless if you're investing or trading. But, primarily if you're investing, you don't want to just focus on price action because that's not your main concern. You're investing for a different purpose, right? But if you're trading, it's going to be difficult to only trade based on a line chart because you're missing out on a lot of data, right? So if you're trading in the short term, you're a day trader or a swing trader, you're going to want to use these candlestick charts because it provides more raw data in each of the candles for each aggregated time period, right? But they do, obviously work better for trading, but that doesn't mean that if you're trading, you can't, utilize line charts. For example, I find that line charts, if you're trading and you're trying to understand, maybe just supports and resistances, well, it makes it a lot easier. For example, you could see right around over here, this was a support, and right around over here, we're seeing it as a sort of resistance. Very clear to see when you're kind of looking at a line chart, right? Now, if I just switch it over to a candlestick chart, well, you could still see it, but it's not that easy to identify with. So, line charts do serve their purpose, especially as Charles Dow saw them as just easier ways to understand the trend. But again, at the end of the day, one of the things I try to focus on is, hey, technical analysis is great. It's always good to look at the charts, especially if you're trading. But even if you're trading, I still try to put more weight on several other data points. But if you guys enjoyed this video, make sure to watch this next video right over here where I talk about using Heiken Ashi candlesticks, which are completely different, but they also have value. Or also watch this video right over here where I go ahead and break down a little bit more of using traditional candlesticks on your charting. With that being said, guys, hopefully you enjoyed this video, and I'll see you guys on the next video. Take care.